morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our top story. Money sent home by OFWs grew by its slowest pace in 3 months in November. That's according to data from the Bangko Sentral. Remittances coursed through banks reached nearly $2.4 billion, marking its third consecutive month of growth. This was 0.3% higher year on year, but the slowest sprint since the 4.1% contraction in August of 2020. Security Bank Chief Economist Dan Ross has said the month-on-month easing in remittance flows could be attributed to new lockdown measures in host countries. A number of countries, including the United Kingdom and Germany, reimposed tighter restrictions last November to curb new infections. The November figure brought cumulative remittances in the 11-month period to $30 billion. That's almost 1% lower from last year's $30.25 billion. BSP Governor Ben Dioknos earlier expressed optimism on remittance growth, saying more Filipino professionals are expected to land jobs abroad. Okay, guys, quickly checking in on how our local currency is doing after that weaker than expected inflation print. You can see, however, on my terminal here that at least this morning it seems to be strengthening. That's after having weakened a touch at the close of yesterday's trade. We are now trading at 48.053 to the greenback. Now, moving over to global equities over in Wall Street, you've actually got President-elect Joe Biden unveiling his new spending plan. So Biden's proposal includes a wave of new spending. So that's going to be more direct payments to households. And that's going to be an expansion of jobless benefits and an enlargement of vaccinations and virus testing programs. But you can see on my terminal here how overnight we did see some weakness when it comes to Wall Street. NASDAQ down by 0.12%, the S&P 500 as well down by 0.4%. You've got tech shares, consumer shares dragging the benchmark lower late in Thursday's session. Meanwhile, when it comes to Fed Chair Jerome Powell, he did mention that policymakers will not be raising interest rates until they see troubling signs of inflation. And elsewhere, oil rose to a new 10-month high. That's in New York. That's after Biden had revealed his stimulus plans, and Bitcoin was trading around $39,000. That's as it continues to recover from this week's rapid plunge. Let's take a quick peek at how Asia is opening this morning. A bit of a mixed bag tilted towards the downside. You've got the Nikkei 225 opening down by 0.2% over in Japan. The Taiwan SIX, however, bucking that sell-off. That's up by 1.3%. But the Kospi down by 0.9%. South Korean shares, however, did have a rally yesterday. Now let's take a quick peek at our own terminal back on the home front. Markets are now reacting to that inflation remittance print. Rather, that came out around 3 p.m. yesterday, so just after market close. Let's see whether there's a reaction to that. It does actually seem to be shrugging that off, at least for the time being, with markets still continuing that optimism that we saw from yesterday. We are up by 0.2%. This comes after shares ended yesterday higher, reversing losses just after the government announced the approval of emergency use of Pfizer. But of course, the big story yesterday afternoon was the banking story, and I'm going to be pulling out that sector for you guys here. This, of course, comes after reports of missing deposits by two depositors in EastWest Bank. These are longtime depositors. The missing deposits were taken by a staff member who is now missing, and this is now being probed by the central bank. Now, monetary authorities of the central bank have issued a statement. They said that they are looking into these reported unauthorized transactions. And in a separate statement, EastWest has confirmed the incident. However, they did not reveal the amount that was stolen. They did mention that, however, it was one of their female branch managers. They did not mention which branch was involved, but they did say they are now in touch with the two depositors. They will be returning the money, and also that this is not a significant amount compared to their loan portfolio. I'm very interested to see EastWest Bank, however, sliding by 0.6% this morning. Now, this comes after after it seems that investors had already reacted to this news even before these statements were issued, because yesterday we already saw EastWest shares falling by 1.15%, already bucking a positive mood in the index and taking the financials down. It still continues to be bleeding this morning. Now, here to chat with us about all of these develops and more, let me bring in Aaron Sai of First Metro Securities. Good morning, Aaron, and welcome to the broadcast.
Hi, good morning, Danny.
Okay, Aaron, now we have to kick off with this East-West story. Of course, we're still waiting on the real figures here, that those haven't been confirmed. There's been a lot of hearsay, and investors had already started selling that off. What does this say about the safety of the sector? Do you believe that this is an isolated incident, or does it show the vulnerabilities still when it comes to banking, especially in the time of COVID?
Well, I think while it is unfortunate, no, I think these things happen. These things happen. But what's good about this is that the systems in place, especially with the hawk-eyed BSP, no, the macroprudential, the supervision function of BSP has really tightened the rules that would make this events more detectable, so to speak, so that no further damage can be expected from the event. No? So I think again we cannot discount the possibility of it happening. This is very unfortunate, definitely, no. But then again, the trust in the system, I think, should not be dented, no, by this one, especially with the internal controls in place and the strict supervision of the regulator.
Now, this comes after we also reported, bank loans growing as of the last sprint, but still slower than it was in the previous sprint. What's going on here, even with the lower interest rates and the cuts of the central bank? Why is it that month on month it hasn't been growing?
Well, I think the loan picture, no, the loan growth picture is still hounded by the issues of the pandemic. As we know, the balance sheet damage, no, is widespread. No, the balance sheet damage is widespread in varying degrees. Of course, no, the corporates are not too keen yet, no, to borrow, and the banks on its side, on the supply side, is not really that. The banks are not really that excited, no, so to speak, to lend out or to be on a risk on mode. But then again, if there would be support, like the legislative support that we are seeing recently, I think moving forward, when the dust settles more, no, I think the risk appetite of both the borrowers and the lenders, no, should be improved as soon as we have somehow a better visibility of what would happen moving forward.
Okay, so still some risk aversion here when it comes to the banking space, and even investors also risk averse when it comes to going in and putting their money back there. Let's talk about the remittance sprint, another one that was quite disappointing in the month of November. Is this again a one-off month? Is this telling of how we should be revaluing the expectations for remittances?
Well, we have seen better. No, we have seen better remittance growth in the past before the latest figure. No, so I think what we have seen is might be a normalization from the bigger growth in the previous months. No, but then again, for the coming year, no, for this year, for this year, I think the expectation would still be a subdued, no, or a bit flat, no, flattish remittance growth. No, again, the world is still reeling on the effects of the coronavirus unless the senders, no, really feel more confident on their economic prospects wherever they may be. No, I think the remittance figure should stay at the same level. No, but we're not too entertaining, no, to the thought that the remittances would slow down this year.
Okay, so it's still growing, but nevertheless at as a slower and more cautious pace. Another indicator when it comes to consumption is the vehicle sales. This seems to be expected naman with shutdowns in manufacturing, and as you mentioned, holes in the pockets of consumers. But we did see the bright spot here is December sales higher than ever compared to month on month and the rest of the year. What does this tell you about the recovery of the economy when it comes to discretionary rather spending?
Yes, it tells us first and foremost that people have money to spend. No, they
Okay.
definitely they have savings from the things that they did not spend on during the pandemic. No, that as the setup was allowed them to do, nor to have. Second, well, the cheers of the Christmas season really brought them that somehow a feeling, no, to spend on themselves, no, and this is one of the manifestation of it. But definitely moving forward, no, if we can somehow project from it, no, the expectations moving forward, vehicle sales is a durable expense, no,
Okay.
non-discretionary at that. You can suspend it, no, but then you bought it, no. So I think that could should be reflective of a better expectation moving forward, no. Maybe it was helped by a lot of discounts, a lot of freebies, and a lot lower, no, a lot lower interest rates compared to before, that made the vehicle purchase price more affordable. But then again, the commitment still the commitment still reflected, no, the somehow maybe at worst, no, a cautious optimistic view moving forward.
Okay. Are you entering into these discretionary sort of stocks at the moment already, and positioning for from those that are the pure golds and the normal staples into these the types of GT Capital and other such?
For this year, actually, First Metro Securities research, no, is very bullish on the cyclicals, no, and those that could be definitely a beneficiary for the recovery, no. So by cyclicals we mean the properties, no, more focus on the properties and possibly the banks, no. But as far as the discretionary spending affected sectors are concerned, I think it goes with the theme. I think it goes with the
Okay.
theme. If we are looking towards a better recovery or a better picture than 2020, definitely moving forward, then I think, especially with this valuation, with this level of valuation of companies that are into discretionary spending industries, no, I think they might be a good candidate, no, moving forward.
Okay, let's talk about the mining space because we haven't really looked at the miners in a while. This rally from the commodities prices again, is that just because of the Biden issue in terms of stimulus, in increasing the demand for such commodities? Is this to do with our own production levels that are actually doing well during the pandemic?
Well, we know that the miners, no, more specifically the nickel miners, no, not all miners are created equal, no. So we have seen that the rally, the more sustainable rally at that, no, gold rallied, but not as sustainably as the nickel miners, no. So I think the driver really on of this strong and sustainable, and I think, no, based on my assessment, a robust, no, uptrend on the prices of nickel miners, I think is really reflective of the changing environment, not only in the Philippines but also in the major markets. No, which is, I think, no, the demand for green energy, no,
Okay.
that could somehow cause, no, the demand for batteries, which is more somehow a heavy on the nickel, no, might continue the interest, no. It might correct, no, the prices might correct, but definitely the fundamentals are there as of now.
Okay, so not just a one-off optimistic turn, but actually a fundamental repricing in terms of nickel demand. You've got the mining and oil counter actually returning positively 5.3% up year to date. Thank you so much for those insights. That was Aaron Sai of First Metro Securities.
Thank you, Danny.
Okay, guys, let's check in on the biggest headlines we're keeping our eyes on. PEZA approved investments dropped by nearly a fifth in 2020. That's due to stringent lockdown restrictions. The investment promotion agency registered 95 billion pesos in pledges, falling more than 14% from 2019 figures. This is the third straight year of declines in PEZA approved pledges and is short of PEZA's downscale target to approve at least 100 billion pesos in pledges last year. PEZA saw delays in investment approvals as the board failed to meet during the strict lockdown, which began in mid-March. Even so, PEZA approvals already slid 5.8% in the first 2 months of 2020. These strict lockdowns affected domestic investor confidence, leading to a 48% decline in local investments in 2020. This offset the 21% jump in foreign investments to 59 billion pesos. The Bangko Sentral is expecting the country to shift to a coinless society by 2025. That's made possible by the rollout of the national ID system enabled by QR codes. BSP Governor Ben Diokno told Business World that the implementation of the Philippine ID system would support the government's push for digital payment solutions. These IDs will include a QR code at the back, which Diokno says may be used to pay for small transactions. The BSP official added that a completely cashless society may not happen in the near future, but said coins may start to become obsolete in Philippine society soon. The BSP's goal for the Philippines is to shift from a cash-heavy society to a cash-light one by the end of Diokno's term in 2023. Slow internet connections and lack of trust in fintech services are hindering the digital shift of MSMEs. That is despite all the benefits the digital trend has done for businesses during the pandemic. That's why the Philippine Competition Commission said the digital space remains dominated by big corporations who can afford to pay for faster connections. Now, amid the acceleration of digitalization, the Asian Development Bank is appealing to all sectors to iron out long-standing issues. These include infrastructure, affordability of technology, and cybersecurity. The global lender said online platforms enhance the functioning of the market to push for more inclusive growth. And that's a first look into the business day. Today's Friday, January 15, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.